Welcome back to Portfolio, everyone. And in today's video, we're going to determine if PayPal is the best growth stock you can add to your portfolio right now. This is a company that has seen an insane run-up over the past 12 months. They have a company that will continue to grow over the next 5, 10 plus years. This is a company that operates within some sector of the market that will only continue to grow as demand for digital payment solutions and, of course, online shopping and digital purchases continues to grow each and every year. So PayPal is currently being traded at $196 a share. And as you can see here on the 5-year chart, they've had beautiful long-term share price appreciation. And this is a company that even over the past 12 months has grown rapidly. They saw March lows, but continued to grow, surpassed pre-pandemic levels, and have continued to reach new all-time highs. And this is a company that operates in a sector of the market that has been growing rapidly. And I believe there is still a lot of future potential growth moving forward. So we're going to evaluate PayPal today, determine if now is the best time to jump into the stock, and determine if we believe this is a growth stock that will continue to post these double-digit returns over the next 5, 10 plus years. So as you know, everyone, I'm the Gen Z investor, and we post videos about the stock market every single day. We talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So please like and subscribe, and we're going to do a full analysis into PayPal today. We're going to take a look at their past performance, take a look at their current financial statements, and actually take a look at what analysts are expecting for the company moving forward, and take a look at if that future growth kind of represents what we're looking for in a solid growth company. So current share price around $196 a share. They have a market cap around $230 billion. This is an extremely large company. They have been dominating their market, and I do believe their market potential will only grow moving forward. Current beta at 1.21, so somewhat volatile company with a trailing 12-month PE ratio of around 90. So if we take a look, over the past 1 year, shares are up 79%. Beautiful long-term growth. 12 months ago, shares were being traded around $108. Strong, continuous growth over the past couple months, and of course, they have seen a big surge. So a lot of people are staying out of PayPal today because they feel it's overvalued because of this continuous run-up. How I evaluate growth stocks is that even though they may be overvalued in the short term, which is still hard to determine, you have to think if PayPal is going to be higher over the next 5 to 10 plus years, if we believe the company's going to grow and the share price is going to grow with it, now may be the time to buy. Regardless on where it is, where it could be 10%, 15% overvalued, it doesn't matter. If you believe this is a super strong company today and you believe they have a lot of growth moving forward, today is the time to buy. Of course, you may be able to get a better deal later on, but that is we are really unsure if that's actually going to happen. No one knows if we're going to see another dip. We don't know if we're going to expect another 20 to 30% decline in the market, or we don't know if the Fed's going to keep pumping in money that's going to continue to boost the market higher and higher every single month. So PayPal's longer-term performance matches where it's been over the past 12 months, totally returning 460% to investors over the past 5 years, which has grossly outperformed their overall industry, which has returned 144%, and outperforming the overall market, which has brought back around 67% total over the past 5 years. So this is a company that is grossly outperforming the market. And of course, when you go to pick out individual growth stocks, you want to try to predict winners and buy stocks that you believe will continue to outperform moving forward. If we take a look at their latest Q2 report, the company has posted massive numbers, and Q2 2020 was actually the strongest individual quarter in PayPal's history, and they have strong future guidance moving into Q3 and for the rest of the year. So they added more than 234,000 daily ads on average in this quarter. Their daily active accounts grew by 37% year over year, which is absolutely incredible. They saw 25% revenue growth, and they saw 49% non-GAAP earnings per share growth. This company also brought in $2.2 billion of free cash flow, 112% growth, 42 cents of free cash flow for every $1 of revenue. Absolutely incredible numbers. The strongest quarter in PayPal's history. Most businesses around the world during Q2 of 2020 were severely struggling. A lot of businesses shut their door forever. A lot of businesses saw 20 to 50% drops in total revenue and earnings. PayPal was the complete opposite. This company thrived during that shutdown just because of the nature of their business. They thrived when consumers are kind of at home buying items online and purchasing using digital payment solutions. And this is a company that saw their greatest quarter ever within Q2 of 2020. Moving forward into Q3 and for the rest of 2020, this company, PayPal itself, actually held up their guidance. They reinstated their 2020 guidance and actually continues to see strong growth potential over the next quarter and the upcoming year. So you can see here they expect in Q3 30% growth in TPV, and they actually see total revenue growth of 25%, and they actually see earnings guidance 45% GAAP earnings per share growth and 25% non-GAAP earnings per share growth within Q3. So overall, they believe Q3 is going to continue to see nice double-digit growth, and I believe this is a company that this pandemic and this economic shutdown really benefited for them. Now, of course, we see that in the numbers, but there was a lot of small businesses that were yet to transition online, and when they were forced to shut down their front retail doors, and they kind of had to make that transition happen earlier and faster than they were expecting. And PayPal is kind of an easy-to-use platform for your payment solutions. They can really be used across the world, and there's a lot of consumers who really trust PayPal and the payment solutions they offer, and of course the other products they offer as well. So it's very easy for small businesses to transition online, use PayPal as a primary payment method, and of course grow their business that way, which not only helps the small business, and of course it helps PayPal grow as well. So now we're going to take a look at what analysts are expecting for the company, take a look at their future expectations, and we're going to go over 3 different analyst reports to get an overall view of analyst expectations. We're not going to solely focus on one, we're going to get a nice diverse report from 3 different set of analysts. The first one's from Yahoo Finance, where over the next 5 years, they're expecting 23.4% per year growth within the company, which is absolutely incredible. They're expecting nice double-digit growth to continue per year over the next 5 years. And of course, PayPal has actually been doing that over the past 5 years. They've been averaging 24% growth. So Yahoo Finance and their analysts, they brought in actually 35 analysts for this report, show 23% annual growth over the next 5 years, which is absolutely incredible. And if we take a look at what these analysts are recommending, for recommending buys, you can see there's 44 analysts that were brought in, 14 strong buy, 18 buy, and 12 holds, which overall recommends a buy on this chart here with 1.8. So this is a company that continues to grow. They've been thriving, and analysts are expecting them to continue that double-digit growth moving forward. 1 year price target from now shows shares going to be around $217 per share, which shows a decent upside over the next 12 months. Another analyst report we're going to take into account was analysts at 43 different analysts recommending a buy, 14 strong buys, 23 buy, and 6 hold. Overall strong buy recommendation with these analysts, and they believe this company will continue to grow. And even though some people are saying PayPal is overvalued at its current position, analysts still think it's a buy now. And if we take a look, they see a price target within the next 12 months at $217 a share, which represents around a 9.5% upside from its current position. Taking a look at their last couple earnings reports, PayPal has done a nice job of 5 of their latest 6 reports. They've shown a positive surprise, and they've beaten expectations by double digits in most of their reports. Of course, they did have one negative report, but that is okay. Overall, surprises in their last few reports is great to see. Third analyst report we're going to take a look at shows price target within the next 12 months at $213 a share, which represents about an 8% upside. And this analyst report actually shows a strong buy for the stock, 28 buys, 5 holds from different analysts. So overall, we took a look at 3 different analyst reports, all recommending buy now for PayPal, and all seeing future growth and actually double-digit growth within the next 12 months. So PayPal is a company that I believe will continue to be here and continue to operate for years to come. And when I evaluate growth stocks and I take a look at all their financial statements and I have to determine if now is the time to buy, I always take into account if I believe this company will be larger in 5 years or 10 years down the line. If I see growth potential, that means the company is going to be larger than where it is today, then I believe it's a strong addition to my portfolio. That's what kind of leads me to buying the stock. The last thing we have to take a look at is their current financial statements. We're going to go over the income statement and the balance sheet just to look at this company's current financial position to see how they've been doing over the past couple of years. So total revenue from a growth stock, we like to see double-digit growth year over year, which is exactly what PayPal has been doing. Year-end 2017, they had revenue of around $13 billion, and all the way up to the past 12 months, they've brought in $19.2 billion in total revenue. So they've done a beautiful job of growing total revenue year over year, which is great to see. If we take a look at the bottom line, you want to see net income. And once again, we like to see double-digit net income growth year over year. 2017 year-end, they had around $1.8 billion in total net income, up to $2 billion, 2.4, all the way up to close to $2.6 billion of net income in the past 12 months. This company brings in huge amounts of dollars and they're posting nice net income numbers. And of course, with the income statement, we like seeing the overall upward trend. And this graph kind of depicts what we just saw with the numbers. 2016, revenue of $10.84 billion. You can see your green represents revenue, nice upward trend year over year, always beating by over double digits. Same with trend kind of with earnings, which is the blue. Each and every year, earnings have continued to grow very nicely. So this is a company that's posting a beautiful income statement. They've seen nice revenue and earnings growth over the past couple of years. If we take a look at their balance sheet, what we want from a growth company is we want to have enough total current assets on hand to deal with all their total current liabilities, so within the next 12 months they continue to operate the business very nicely. Then we like to see an overall trend of total assets compared to liabilities, where the overall assets can deal with all their total liabilities and continue to have a strong positive number. And of course, we always like to see growing equity with businesses. So if we take a look, they have total current assets at around $38.5 billion. And their total current liabilities at around $26.9 billion. So a current ratio above 1, $35 billion compared to 26.9. Overall nice current ratio for PayPal, and I do believe they will have no problems paying off their short-term debt within the next 12 months. If we take a look, total assets around $51.3 billion compared to total liabilities at around $13.4 billion. So overall, nice total ratio, much more total assets compared to total liabilities. And I believe this is a company that can continue to operate very nicely over the longer term, 12 plus months into the future. Overall equity, we want to see an upward trend once again. If we take a look here, you can see just that. Equity in 2017 at around $14.7 billion. Each and every year, nice upward trend where in the past 12 months, total equity sits around $16.9 billion. So overall, PayPal has seen rapid growth over the past 12 months. This company is operating within a sector of the market that I see a lot of future growth. And of course, when I'm thinking about buying a company like PayPal, a couple of key metrics I'd like to take into consideration is, has the company been growing at a fast rate? Do I believe that growth rate is only going to continue into the future, which I do? And do I think PayPal is the type of company that's operating in a sector of the market that is growing? I like adding companies who are growing themselves, but also growing into a market, in a sector of the market that is growing as well, because it's nice to see companies in a growing sector, because that just shows there's a lot of future potential for the company as a whole. So overall, I think PayPal is a solid company. I really like where they are today. Even though people have been saying this company is overvalued, we took a look at 3 different analyst reports, all showing buy, and all showing that the price target within the next 12 months will be higher than where it is today. We don't know if we're going to see another market crash. We don't know if we're going to see PayPal shares drop another 10-15% at all. So now may be the best time to buy in. I will personally be adding PayPal to my portfolio over the next coming weeks. I will slowly jump into the stock. I believe and plan to hold this stock for the next 10 plus years. I don't really see many other businesses coming in and taking over what they've been doing. I believe the company has a lot of strong things around it, not only with their financials. It's a household brand. People trust using PayPal. And a lot of people actually say they prefer using PayPal over other payment methods, which is great to see, especially when we're living in a world where more and more purchases are being done over the internet. So I think PayPal is a company that will continue to grow. I believe it is a buy now in my personal opinion. And I believe this is a stock that will only grow bigger and larger over the next 5 to 10 years. Thank you for watching, everyone, and I'll see you in tomorrow's video.